You're right, guys. So this is how we're going to take advantage of losing traders. Yeah, traders who FOMO in and traders who can't accept the loss, who suffer from something called loss aversion, and traders who don't use stop losses. Yeah, when they trade, and this is exactly how we're going to do it. So first of all, you need to look for a setup that traders will take. Now, there is only really three types of traders. There is the breakout trader. Yeah, you've got the retracement trader, and you've got a level trader. Yeah, level trader. So what we need to do is we're understanding, you know, as we know, the Forex market is a zero-sum game. So for someone to win, someone else has to lose. So I'm trying to take advantage, and we're trying to take advantage of losing traders. And how do we do that? By understanding what they're doing, yeah, at certain certain setups that they take, yeah. And when those setups fail, yeah, and you can see it, it's very obvious to see, yeah. So what we're doing is we're seeing this level. So I know how breakout traders trade. They're looking at this level 1, 2, 3, and what they're anticipating is what? A breakout. Because you know, when prices go from one market state, which is trending, yeah, to then what? Ranging, yeah, to then what? Trending, maybe to the upside or to the downside, etc. Yeah. So they're looking at that, they're looking at that, and they're looking at, you know, this trending, ranging, trending, etc. So at the moment, they're looking at what? Some sort of breakout. So what should happen if we see a nice candlestick on the hourly time frame or any major traded time frame, then probably the chances are that breakout traders are going to be getting in breakouts at that level, because they don't want to wait, yeah, because prices could keep going higher and not give the retracement traders a chance to get in, yeah. Boom. What do we get? A nice move to the upside. I can guarantee you that all these traders would be placing their stop losses probably around here if they trade with stop losses, and if they don't trade with stop losses, they're definitely still getting in regardless right here, and trying to maybe mentally manage their their risk. Yeah, so we know that they're in. Yeah, this is the capture phase. Yeah, this is the temptation. This is the commit. Yeah, because if they're not going to commit now and prices go higher, then that's it. If you know what I mean, then they're gonna, then it's like they have to take they have to get in at a worse price. So they're trying to get in at the best price possible, and they're in here. This is where they enter. Yeah, but now once they've committed capital, yeah, they're pretty much now caught in their positions. They're committing because of FOMO. They don't want to miss out on this move. So then what we're looking for is where this trade fails. Now this trade could go to the heavens. We have no idea. None of us do. Yeah. But what I can tell you for sure, yeah, is when it fails on them. And let's zoom in a little bit. So immediately prices start to reverse back down to here. And what do you think retracement traders are doing? Yeah. So these guys here, retracement traders now are thinking, oh, thank my lucky stars. Momentum. How many times have you heard momentum? The momentum's to the upside, right? No. Well, I say no yet, not yet, but let's say let's reverse back a little bit. 1 second, let's reverse back a little bit, yeah. So retracement traders, we know how they get in. They get in because they're looking for price action at a level of what? Resistance should turn to what? Support. We've got a nice little pin bar, price action. Price starts to look like it's moving higher. This should now start to move higher, shouldn't it? In the same way that the breakout traders thought that this was going to move higher. Now, again, if this moves higher, that's none of our business. Those traders make money. Good, you know, for them. What we're looking to do is take advantage of when obvious setups fail these traders. So we know that not only are breakout traders in, retracement traders are in as well. Now we start to get a failure in that reality, yeah. start to occur. Now, traders who don't trade with stop losses, or traders who are not disciplined enough to, accept the loss due to something called loss aversion, where losses feel worse than gains feel good, they're going to start to either move their stop loss instead of having it there. Now they're going to move it there. Now they're going to move it there in an attempt to not get stopped out as prices go against them. Yeah. But what that does is, instead of risking 1 or 2%, now they're down 5, 6, 7, 10, 15% as prices go against them. This is what is known as the pain phase. So they've been captured in their position, drawn in by price action, and then the pain phase. And the further prices go down, the more pain that they're in. And on this pair, Euro New Zealand, this has probably moved from the highs from 1.69 to 1.67, maybe about 150 pips or so. Yeah, down here will be about 200 pips. I guess keep going if it goes down. Actually, let's just zoom out. Zoom back, right? So yeah, so prices, they're going through a bit of pain at the moment, right? They're going through a bit of pain. What do you think these guys, what do you think these guys are going to do if they're still in this trade here, and they're looking at the pain and they're seeing, if I get an opportunity to get out for my original loss, if I can get out, what do you think I want to do? What do you think they're going to do? They are going to exit. They're going to try and look for some pain relief, which then their relief is up here. But if they went long, this is the supply and demand equation. There's no point in just trading levels of supply and demand if you don't understand the psychological element, the zero sum element, to this. So if these guys got long here, they bought here, what did they have to do to exit? They have to sell to exit. You got to press sell on your broker. Not only do we have breakout traders, we have retracement traders looking to sell. So there should be supply around there. We also have traders who bought from down here, nice buying opportunity potentially. And where are they taking profit? Somewhere in the same area, somewhere around here, probably more at this level of resistance. Resistance should turn to, and that was failed support, should turn to what? Resistance. So we've got supply, some more supply orders there from take profit. What else do we have? We have traders who are going to be entering new positions and they're getting short. That's more supply. All right, that's relief. IEF. So net we should have in this whole area here, we should have what? More supply orders than demand. This is how the supply and demand equation works. This is how we take advantage of traders who don't use stop losses, who are probably adding into these trades. And just another side note as well is that the traders that don't trade with stop losses, that have been adding into trades and are making money on the way up, where are they going to end up taking profits on their trades to make up for the trade that they took up here, if you know what I mean? So they were in a losing trade, but as they scale in, martingale in, or whatever it is they do, they're going to be taking profit as prices go to the upside as well. So these guys are going to make money, probably covering their loss here, but it still adds to the supply and demand equation here as they exit their trades and take profit. So net we should have more supply than demand at this relief zone. Capture pain relief. This is how you take advantage of losing traders and their biases, and traders who don't trade with stop losses. This stuff happens over and over and over again, and this is basically how we trade. It's not trading in hindsight, it's trading actually, matter of fact, it is trading in hindsight. It's hindsight trading. This isn't something that is taught in on YouTube or in the Forex world. It's really a unique concept, and if rather than chasing price, what you want to do is look for where traders are captured in their positions, where you may have taken this trade yourself if you're a breakout trader, if you're a retracement trader. And then I'm trading in hindsight because I'm looking at you guys and I'm saying, I know you guys are caught in your positions. I know for a fact, yeah, there's an argument that says that, you know, there are traders that would have been stopped out. Fine, I'm not talking about them. I'm talking about the guys, and the ladies as well, that trade Forex, that don't use stop losses, that are not disciplined enough to use, they keep removing their stop losses. And I'm looking back in time and I'm saying, yep, I know something about them that they don't know about me, and I'm going to take advantage of that. All right then. Take care, and I'll speak to you soon. If you have any questions, leave it in the description box below and I'll try and get back to you as soon as possible. Take care.